Hi, welcome to Market Alert for Friday, the 22nd of November 2019. So, yesterday, bonds, stocks, Bitcoin, and bullion all drop as trade deal hopes tumbles. A bit of a theme going on here, isn't there? With this trade deal, it's either on, it's off, it's on, it's off. So, as I said, I think there's some sort of a ruse going on here personally that it's being used to manipulate the markets along with the Federal Reserve and the plunge protection team and all the rest of it. But anyway, yesterday's market reaction, starting off with the daily in the Dow, the market sideways as prices rallied, fell and came back, and prices up on the overnight there. So let's have a look inside of yesterday. You'll see the market moving higher in the pre-market session. Lagarde was out yesterday at midday speaking. I've no idea what she said. I didn't really pay any attention to it. But you know what they're going to say is going to be bullish for the stock market. And I also note that she's out again today as well. You'll see her speaking at 8:30 a.m. So by the time you see this, she's either spoken or heads up, she's speaking at 8:30. There is some other news as well, but the market doesn't seem to be impacted by this anymore. There's PMI for the UK, there's flash news for Germany and France. But the main thing is whether the trade deal in the US is done or what the central bankers are going to do to keep the markets levitating in the highs that they've got. But you can see there's a pattern with all of this. The futures market is always higher overnight, majority of the time. And then the cash market opens and we see prices coming under pressure as the cash sale of stocks takes effect. So there's this constant pumping up of the market with the futures, and the same in the VIX market by selling the futures to keep the volatility low, to keep everything looking as if everything is perfectly fine. So the Dow sells off in the first part of the session, closing below the DP level and the 200 MA, and then finding some support. All of the volume taking place in the first part of the session. We then get a 76% retracement and the market is brought back. So the selling is absorbed in the first part of the session, which we see time and time again, and then prices being brought back. And it's great because you can actually trade it knowing full well that once the initial part of the selling is over, the market will be brought back in the manipulation that they have going on at the moment. Of course, once the market is allowed to find fair value, then it will be a different ball game. So once again, we see the market selling off just at the end. Well, hardly a sell-off. It's only about 70 or 80 points. Then the market puts in 76%, comes back above the DP level, and then prices are continuing to move to the upside there at the moment. So a predictable pattern in all stock markets, whether it's the DAX, the FTSE, or whatever it is that you choose to trade. This is what's happening at the moment in these markets. The implied volatility is kicked up a bit as well, and it's also closed above the 20-bar moving average as well. So starting to show some sort of weakness coming into this market. And as I've said, we are due for a correction in this market. And you can see there we've got the amber warning on the implied volatility. And this coiling that we've had of the implied as well is explosive once markets do actually or are allowed to break down. So at the moment you can see that we're still above the 20-bar moving average on the top side, but heading towards it. And as I've said before, we are due for a correction in this market. It's just whether they will allow it or continue to pump money into the markets to actually hold it on the highs. And one market that is allowed to move lower is Bitcoin, and that's because the powers that be don't want Bitcoin moving higher, which is why they created the futures market 2 years ago next month in order to stop its meteoric rise to 20,000. And ever since then, the market has struggled to move to the upside without getting panned at some point. On Monday, we looked at putting in the 76% retracement in the weekly chart. The market has taken this out. It's taken most of the week to do it though, but now it's broken. We're heading down towards the 72.98 or 7,300 level. In the daily chart, you can see yesterday the market was holding on the overnight at the 76% retracement, which we spoke of in the market alert, and then yesterday they just slammed the market, surprise move, and again you can see the 7,300 level there where the market could move down to. And this was the drop. You can see how quiet the market was in the first part of the session. We did have a couple of sell signals there. Then we had a shakeout, and then we went back to the sideways move again. And then again, we were alerted below the 20 bar moving average, but not to the fact that we would get a massive drop like we see here, where the market saw a big seller come into the futures market, sold it, see the profit taking, and ever since then we're now back in the sideways move once more. Although the market looks as if it's under a lot of pressure here to the downside, which is something we've spoken of for a long time in the market alert, given that all of the time frames that we look at are currently below the 200 MA of each respective market. In the 4 hour, you can see how the market's broken out of this sideways move as well during yesterday. First 4 hours, second 4 hours, and then overnight to the market trading sideways there. So under a lot of pressure at the moment, the downside in this market being the favoured side for any sort of profits at the moment. Okay, that will do it for this one. Like I say, keep an eye on Lagarde at 8:30 if you trade any of the stock markets like the DAX, anything in the pre-market sessions as well. Could be a bit of movement there depending on how generous she's going to be and what she's going to say with regards to propping up the European economy by printing more and more money as well to buy toxic corporate debt. And with that, thanks for watching. See you in the next one.